direction at the moment ahead of a lot of news events this week. So everyone trying to price in whether this trade deal is going to fall apart or not. Certainly we've got all the authorities both in the US and China saying that they're progressing well towards phase one. As you mentioned, we've got the deadline now for that Donald Trump could potentially impose new tariffs. We've also seen headlines that China has issued a directive to remove US company devices from the Chinese supply lines essentially. So this is going to impact companies like Dell, HP, and potentially Microsoft. And at the same time, you also mentioned the Chinese export numbers tumbling, down 23%. So if you actually look at the moving parts and the metrics, it looks like there's every indication that this trade deal might fall apart. But at the same time, we're being told by both the US and China that things are looking good and that phase one is going to be completed. So I think a lot of investors just sitting on the sidelines waiting to see the resolution before deploying capital.
Yeah, you speak about the Chinese export numbers. Yes, those have fallen, but we saw imports pick up a touch, which may mean that the stimulus that the Chinese are trying to put back into their economy may indeed begin to start changing the progress and the process there. Of course, we did see an advisor to the central bank as well in China saying that the average and the potential average growth for China in 5 years around 6%, if not less.
Yeah, and certainly it's not just the import numbers you need to look at. If you look at last week's PMI numbers out of China, very, very robust as well. So Chinese manufacturing is actually doing fairly well, despite their exports, especially their exports to the US, falling. Now, it's difficult to say whether this is, especially the US export numbers, which have collapsed, is not just a function of China round-tripping their goods through other nations, so exporting to the likes of Vietnam and then having Vietnam exported to the US, because the fact is the Chinese manufacturing base is still firing on all cylinders. So they're making goods. It's just difficult to tell exactly where they're shipping the goods and who is consuming them.
Yeah. Are we worried, though, that China is going to reach less than 6% growth, or is that just the new normal and the world is trying to work around it?
I think certainly we had to see the Chinese growth rates slowing down eventually, just because the base that they're coming off is higher and higher. And for China to continue to grow at 6% per year indefinitely when the economy is currently the size that it is, it's almost unsustainable. So you look at it and you look at, I suppose, through history, China is a fantastic nation, and it's a nation that has often been on top of global politics and global economics. So, the expansion that we've seen in the Chinese economy over the last, say, 20 years really is actually a return to a long-term normal. Yeah. And, while we do anticipate that slowdown will come, it's coming off such a high base at this stage that I think markets are pricing it in. Markets have been expecting this for some time. We understand that the Chinese economy it's shifting from a very infrastructure-heavy led economy, that's consuming an enormous amount of the global resources. If you look at especially the base metals like steel and coal and iron ore, and instead it's shifting towards a more consumer-driven economy, which is as the Chinese middle class wealth improves. So it's an economy in a lot of flux, and I think just because the growth rate started to dip below 6%, this is not something to necessarily say that China is going to stumble and fall.
Yeah. All right. Well, let's move on over to Europe then. The ECB, Christine Lagarde finally taking over. Bonjour, madame.
Bonjour indeed. So Christine Lagarde, obviously this is going to be her first, we've got a lot of central bank meetings this week, so we've got the Fed as well, but the ECB I think is going to be fairly interesting. So while central banks have been stimulating and almost putting in preventative stimulus should there be a wobble between the US and China, and should these trade tensions really escalate, I don't think anyone's expecting stimulus, but what we have got in the ECB at the moment is that Christine Lagarde, moving in, is conducting a strategic review of the whole of the ECB's operations. Now, this could potentially shift monetary policy in the European Union quite dramatically. The last time a strategic review of this nature was undertaken was almost 20 years ago. I think the euro was 4 years old when something like this was done previously. So you're going to see, I think, with a new leader of the ECB, you're going to see some changes coming, and I think everyone's going to be watching this meeting very, very closely just to see what tone she strikes.
All right. We're going to unfortunately turn to the SOE saga here locally, unfortunately. One, you've got, of course, Eskom and the saga happening there. We're being told that there's no chances then of a business practitioner or business rescue for Eskom, which currently sits in, if my maths is a little bit on point at this point, it should be even worse off than SAA.
Quite potentially. Again, you look at Eskom though, and the issue around Eskom is the enormous debt that sits on Eskom's balance sheet. So potentially there is an argument for restructuring, but at the same time, the fact that you can let something like SAA slip into business rescue, the same approach can't be adopted at Eskom just because of the nature of Eskom's business. I mean, I think everyone is feeling the effects of load shedding at the moment, and it's kind of a reminder, I think, to all of us that Eskom is essentially too big to fail. Eskom is just so important to the growth and to the success of the South African economy. It cannot be allowed to fail, and the restructuring process and the turnaround at Eskom has to be more sustainable. We can't just let parts of Eskom fail. Looking at Eskom would be, without that debt burden and without the interest burden that it has to carry, it could be very, very profitable. Of course, the major issues are around collections and not being able to cut off electricity to areas that are not essentially paying. So it's a far more tricky situation, I think, than SAA. But unfortunately, you look at these SOEs and you look at the way that they've been managed and the mismanagement that's come through, and it's unfortunately a lesson that we're learning, but we could have learned from just observing other economies. Government generally isn't the best provider of goods and services. It's not the role that government excels in. This is generally left, when left to the private sector, like these sorts of operations are managed more efficiently, and the services are provided in a better way to the public.
Yeah, we certainly hope that message is heard somehow. But very quickly, speaking about a private entity that is managed better than a public one, Commis 1.1 billion rand that it was supposed to receive from SAA. Well, they're not getting that anytime soon, are they?
Yeah, this is absolutely fascinating. So, and I suppose it shows what's happening on our local exchange at the moment. So, Commis, obviously they're owed, via, I suppose, an antitrust award, at least 1 billion rand from SAA. They had a plan in place to slowly have that paid from, I think it was from February 2019 through into 2020. Obviously, with SAA falling into business rescue now, almost all bets are off the table, and Commis is going to find it very, very difficult to enforce this 1 billion rand award. Commis market cap, so the entire value of the issued share capital of Commis is only 1.5 billion. So Commis is essentially almost a one-way bet on whether they're managing to get these funds out of SAA. The problem is now that SAA is in business rescue, Commis just becomes another creditor that's looking for cash, and they essentially join the queue along with everyone else. What astounds me is that the value of Commis shares traded today, while there's this kind of 1 billion rand question hanging over the company, is 170,000 rand. So it seems that no one is interested in taking a view on this. I mean, either Commis is going to be wildly profitable after this, or we're going to see shares collapse, and yet very, very little trade happening around it. And it just really speaks to almost the lack of interest in some of our small and mid-cap stocks.
Gary, thank you so much. Always good chatting to you. Enjoy your December. If we don't get to chat again, always good having Gary Boyson then with us there from our JSE studio. Gary Boyson from Rand Swiss. We will continue